Hi everyone, in this video, we will discuss the NSEL scam, which is India's biggest commodity trading fraud. We'll cover what it is, how it happened, who were the players involved, what went wrong, and finally, what was the impact and what we learned from this. And just so that there are no surprises towards the end, let me tell you that this is a story of more than 5,000 crores scam. So if that sounds interesting, make sure to watch the entire video without skipping. So let's begin with what was NSEL. NSEL stands for National Spot Exchange Limited. It was a national-level commodity exchange based out of Mumbai that was established in 2003. It was promoted by Financial Technologies India Limited, or FTIL, which is now known as 63 Moons. Now, as the name suggests, NSEL used to facilitate spot exchange of commodities. In simple words, NSEL was a platform where people could come and trade in commodities. For example, let's say you are a trader who buys silver and then resells it to jewelers. If the price of silver is currently at 450 rupees per kilogram, but you think that the prices would increase in the next few days, then you can buy silver today and sell it for delivery after 20 days on NSEL. Now here your profit would be 10 rupees per kilo that you have traded. That's because you bought silver at 450 rupees per kilo today and sold it at 460 rupees per kilo 20 days later. Similarly, if you thought that the prices would fall, then you could sell silver today and buy it back later at a lower price. This is called future trading, and exchanges like NSEL make money by charging a small fee from traders like you. Now there are two types of contracts traded on such platforms. One is a physical contract where the buyer actually takes delivery of the commodity. Second is a cash-settled contract where the buyer doesn't take delivery of the commodity and the profit and loss is settled in cash. For example, if someone sells one lot of gold on NSEL and he has to either deliver the gold or pay the equivalent amount of money depending on whether he entered into a physical contract or a cash-settled contract. Now both these types of contracts are settled on a T+2 day basis, which means if you enter into a contract today, it gets settled within 2 days. But on NSEL, many contracts did not get settled on a T+2 day basis. For example, there were some contracts on NSEL that had settlement dates well beyond a month from the transaction date. These are called forward contracts. Now, as far as I know, at the time of NSEL scam, there were no regulations around trading in forward contracts in India. Now, as you will see later, this fact played a major role in the scam. Also, another important thing to note here is that NSEL only facilitated exchange of contracts, did not actually deliver any commodities itself. Instead, NSEL provided the platform and the clearing and settlement services. Delivery of commodities was the responsibility of the parties that enter into these contracts. For example, if you buy gold on NSEL, then it's your job to arrange for its delivery. For this, NSEL had appointed certain entities called as warehouse keeper members, whose job was to keep commodities in their warehouses, issue negotiable warehouse receipts against them, and deliver them to the buyer when asked for. Coming to the second question, what was the scam? So NSEL never traded in actual commodities. Instead, they traded in fictitious contracts. To understand this better, let's go back to our earlier example of buying and selling silver. Let's assume that you buy one lot of silver on NSEL worth 1 crore rupees. Now here's where the scam begins. You give your money to NSEL, and NSEL uses that money to buy silver from a counterparty, say a trader. After that, NSEL issues you a contract saying that you have bought one lot of silver from us and we will deliver it to you after 20 days. Now in reality, you haven't bought silver yet. You only have a contract with NSEL saying that you will buy it in the future. Technically, this is very similar to entering into a forward contract. However, the problem here is that NSEL never intended to actually buy silver when you enter into this contract. Instead, they used your money to buy silver from a counterparty, but that silver never reached their warehouse. As a result, there was no real buyer of your contract. NSEL had no intention to actually deliver silver to you after 20 days. So basically, you bought a contract that had no real buyer. Now this is the first red flag, and a clear indication that something is fishy. Second, you entered into a contract for buying silver, but NSEL never took physical delivery of the same. They didn't even appoint a warehouse keeper member for this purpose. Instead, they entered into a bilateral agreement with their counterparty, which again is a clear violation of their own rules. Third, NSEL made huge volumes in contracts where the settlement period was far beyond T2 working days. As per SEBI records, 90% of the total turnover on NSEL during NAS 2013 came from contracts that had settlement dates beyond T2 working days. Since there was no real buyer of these contracts, NSEL started approaching existing clients to settle these contracts. But soon they realized that most clients didn't have funds to do so. So NSEL started sending emails to investors, asking them to deposit funds in their client accounts in order to settle their contracts. Most investors fell for this trick, since they had faith in NSEL and thought that this was urgent. But little did they know that this was a trap. Soon after depositing the funds, many of these investors noticed that it was marked as used for contract settlement. That's when they realized that they had been duped. Fourth, in many instances, NSEL sent emails asking investors to deposit funds in a specific bank account. Once the funds were deposited in this account, they were immediately transferred to other accounts and eventually vanished. Fifth, many investors alleged that NSEL executives themselves also traded on the platform and exited before the scam was exposed. Sixth, according to SEBI, some brokerages missold these contracts to their clients, saying that they are low risk, whereas in reality, they were highly volatile. Some brokers also misrepresented that NSEL was promoted by the government, whereas in reality, it was a private exchange. Some brokers also assured clients that they would earn an annualized return of at least 12% by investing in these contracts. In addition, there were also instances where brokers changed client code to avoid detection by SEBI. Lastly, seventh, since most investors invested through brokers, they did not have direct access to NSEL. Therefore, they had no way of knowing what contracts they had actually entered into. So these were the 7 major reasons why the NSEL scam happened. Coming to the last question, what was the impact? The NSEL scam is considered to be one of the biggest scams in the history of Indian commodity market. According to SEBI, the total value of contracts traded on NSEL is 5,600 crore rupees. However, only 1,700 crore rupees worth contracts were genuine. The rest were fictitious. There were about 13,000 investors affected by this scam. Most of them invested through brokers like Geojit, Carvey, Fifth Element, and Motilal Oswal. Fortunately, there were no foreign investors involved. However, some international banks were affected since some Indian banks had opened special non-resident accounts to facilitate transactions for NSEL. Following this incident, SEBI, along with FMC and Ministry of Corporate Affairs, launched multiple investigations and even filed criminal cases against NSEL and its promoters. While there have been several arrests in this case, there has not been much progress so far. Furthermore, SEBI came up with new guidelines for commodity derivatives segment in India to prevent such scams from happening in the future. Some of the major changes included, among others, no entity can now act as a warehouse keeper member and a clearing member at the same time. Finally, coming to the last question, what was the master plan behind this scam? Honestly, it is not very clear. Promoters of NSEL claimed that they wanted to expand NSEL to become the largest commodity exchange in the world. To achieve that goal, they planned to raise money by issuing depository receipts in US and Hong Kong. However, due to some reason, that did not happen, and NSEL came up with this stupid idea of creating fictitious contracts and defrauding investors. That brings me to the final message of this video. No matter how big and trustworthy a company or an exchange seems to be, always do your due diligence before investing. Secondly, robust regulations can do wonders. In the absence of regulations or lack of enforcement, bad actors will always find a way to dupe investors. I hope you enjoyed this video. If you did, please press the like button, share it with your friends, and subscribe for more such videos. And remember, the stock market may seem to be a get-rich-quick scheme, but in reality, it is a wealth-destroying machine, so trade carefully. Thanks for watching.